Hi and welcome all to Knowledgist and Karnataka Gramin Bank Officers Organization and Workers Organization affiliated to BMS. We are starting this session in a second. Today we have a very special guest with us. Before the class beginning, I will be arranging his address. Before that, I would request all of you to join and confirm my audibility. Are you all ready? Are you all set? We are about to end our session. This is the concluding session of this batch. Almost 15 plus classes we have taken so far. And also we have given application access where you have been enabled to watch most of the videos that is related to banking promotional exam. And apart from that, notes and quiz. So I hope all of you got benefited out of this exclusive program, which is being sponsored by Karnataka Gramin Bank Officers Organization and Workers Organization affiliated to BMS. And thankfully, we are the first organization and first union and education institute to collaborate to start such a noble initiative. And post that many unions have started this noble initiative, and we are happy to be trendsetter. Both the organizations are happy to be the trendsetters in this in it. So just a second, let me start. So I want to share with all of you. Yes, after the grand success of our first edition in 2020, this is our very second edition in collaboration, Knowledgist and Bharatiya Mazdoor Sangh. The unions responsible to start this program are the Karnataka Gramin Bank Officers Organization and Karnataka Gramin Bank Workers Organization. So today with us is Mr. Tiptur Shekar, President KaGBOO, affiliated to BMS, that is Karnataka Gramin Bank Officers Organization, and affiliated to BMS. So I would like to invite Mr. Tiptur Shekar to join us. Sir, please come on screen. Sir, please, I invite you to come on screen.
Due to some technical error, I could not open video.
Oh, sir.
Shall I?
Yes, sir. We can go with audios.
Yes, sir.
Yeah.
Shall I, sir?
Yes, sir. Yes, sir. Yes, sir. Definitely.
Okay. Namaste to all of you. Firstly, I would like to wish everyone a very happy new year. And I would like to extend my thanks to Mr. Pravanjan Tripati, sir, who responded to the request of our organization and successfully conducted the training program for the second time. We are conducting this program with a good intention to improve the knowledge of our colleagues. It will be very helpful for them to attend the written test with more confidence. As you know, all limited number of vacancies are available. All the candidates cannot get promotions. But after acquiring this much of additional knowledge, everyone is eligible for promotion and all have become capable of handling higher responsibilities. That should be the main takeaway of this coaching. Try to use the knowledge gained through this coaching in day-to-day work. It increases your work efficiency. Your work will be easy and your efficiency will bring greater strength and price to your efforts. Increased efficiency and effort will give you greater recognition from management. That way, your promotions open up another way. So, if we use this coaching not just for exams, but for your knowledge enhancement and performance enhancement, we have a real sense of meaning and effectiveness for this work. We are extending this program to all our colleagues, irrespective of the unions and without any restrictions, and going forward will continue to be extended. This is the motto of our organization. This program is very popular, so popular that not only our bank colleagues, but also friends from Vikas Gramina Bank eagerly contact us for the video links to take part in this. I regret to say that even though we hope to conduct many such programs for the benefit of all our colleagues, it is not possible due to lack of funds. So we request all of our colleagues should be more affiliated with us so that we can encourage many more useful programs. Tripati sir has already covered about general banking. In addition to that, we request you all to concentrate on following some matters also. Please refer previous 2-year circulars, mainly concentrated on credit management and recovery management. Recovery management means we have to concentrate on surface actions under DRT, OTS settlements. In OTS settlements, there are 2 different tools are there, and also some differences in between them. First one is nano OTS and another one is general OTS. Under general OTS, we are going to settle on book balance only, and doubtful and loss asset accounts only eligible under this scheme. But whereas in general OTS scheme, we are going to settle on contractual dues. It includes book balance, interest suspension, undebited interest, and all other charges. And all NPA accounts and standard accounts are also eligible under this scheme, except some fraud and staff accounts. So also we have to refer financial inclusions regarding non-interest income, annual credit plan reports, staff service regulations, etc., etc. So lastly, I would like to wish all the very best to all the candidates who are attending the exam on 30th, and may everyone clear the interview successfully with flying colors. Thank you all. Thank you, Pravanjan sir. Good
Thank
night.
you, sir. Thank you, sir, for your kind words.
Thank you. Thank you very much. Good night.
Thank you, sir. I'm very happy with the words spoken by Tiptur sir. So this is encouraging. I hope all of you will get benefited out of this course. So this is not only for your exams, as sir rightly told, this is also for your knowledge building. And with adequate knowledge, even you can do wonders in your promotional exams. You should not be knowing the right answer every time. Anytime you know how to eliminate wrong answers would also help you similarly. So with that note, I would like to start our today's session. As we have covered almost all the topics, today we will be discussing about Banking Regulation Act in very short manner. Also, I left out Basel norms. For that, I will be extending the class that I have taken in our first edition in our last year. So that class link will also be shared, like I have shared yesterday, NI Act class. Hopefully all of you have learned something from the NI Act class. As I saw today, there are more than 300 plus people watched that video from yesterday night. So hopefully all of you have gained something out of that class. So let's begin our class today from Banking Regulation Act, and I will be sharing you additional Basel 3 class. Basel is a part of risk management, and it is going to be very helpful for your exam point of view because it will address capital adequacy ratio, risk-weighted asset ratio, NSFR, LCR, so many concepts. Not only Basel, it will cover all types of risk management in banking. So that class will be useful. And today, in a very short period of time, I will be trying to cover Banking Regulation Act. So let's begin today's session. So just a second, guys. Yes, that is Banking Regulation Act 1949 with recent amendments. So what about Banking Regulation Act 1949? This act has 5 parts and 56 sections. Other acts are used as a secondary to this act are the NI Act, which we have already covered, Companies Act 1956, which now stands changed to or amended in the year 2013. So passed as Banking Companies Act in 1949, it came into force in March 1949 and changed to Banking Regulation Act in 1966. It was made applicable to J&K in the year 1956. The Banking Regulation Act is not persistent to primary agricultural credit societies, non-agricultural primary credit societies, and cooperative land mortgage banks. Okay, so main sections of the BR Act. First one is the section 5, which talks about the definition of banking. If it is asked even in your interviews, which section or which act of which section of which act defines about the definition of banking, then it is the section 5 of BR Act. And what section 5 says, that banking refers to accepting the deposits of money from public. The deposits are accepted, thereby can be invested or lent, and it is repayable on demand, and such money can be withdrawn by draft or check. Clear? And a banking company is a company which transacts in the business of banking in India. This company fulfills the state of affairs of being a company as given in Companies Act 2013. So it stands amended. So whatever we will learn as per 2013 Act. Clear? Companies Act 2013. So section 6 talks about the forms and business in which banking companies or banks can transact. These are lending, borrowing of money with or without security. With security are the secured loans, without security are the personal loans. Issuing traveler's check, buying and selling of foreign exchange, notes, deposit vaults, collecting and transmitting of money and securities, buying bonds and other securities on the behalf of the customer. Clear? So yes, just a second. So 1 second, let me check, is it working properly or not? Just a second. Okay, so these are the main business of banks. Transacting and carrying out every kind of guarantee and indemnity business, that is bank guarantee, etc. Selling and managing and realizing property which comes in possession of the bank in procedure of settlement of claims, executing and undertaking of trust, other works which are advancement of main purpose of the company or incidental, a form of business that is defined by the central government in its issued notification. So these are the main business where a banking company can essentially transact. So section 7 says, no company other than banking company shall use as part of its name as bank or banker or banking, and no company shall carry the business of banking in India unless it issues as part of its name at least one of such words. So any company who wants to do banking business has to take license from RBI, and they have to essentially add the name bank, banker or banking into them. Without adding bank, banker or banking, these three types of word, they cannot interact with banking business, right? And second, other than these banks, no one can use these three words, bank, banker and banking. Clear now? Is it clear to all of you now? No company can use these three specific words, that is bank, banker and banking. And a bank or a company which wants to take deposit and give loans, he has to essentially add out one name out of these three names, and this is as per section 7. I will today be highlighting only important sections. MCQ related all are given in application, please refer to that. Okay, so section 8, prohibition of trading. Banks cannot trade, so that is defined under section 8 of Banking Regulation Act. Notwithstanding anything contained in section 6 or any contract, no banking company shall directly or indirectly deal in the buying or selling or bartering of goods, except in connection with the realization of security given to or held by it, or engage in any trade or buy or sell or barter goods for others otherwise than in connection with bills of exchange received for collection or negotiation, or with such of its business is referred in clause 1 subsection 1 of section 6. So what it essentially saying is that banking company cannot do trade, or whatever is not listed under section 6, banking company cannot do business with that. But if something or some security is held by the bank, and upon realization of that security, upon the default of the customer, when banks want to dispose that security, then bank can trade, bank can sell, bank can do whatever they want to do with that product, or they can lease it out. Only when it is leased out to them and the counterparty has defaulted in the agreement, then only it could be used, right? Is it clear now? Section 9, disposal of non-banking assets. What are non-banking assets? What are non-banking assets? What are non-banking assets? Deposits, CASA, term deposit, demand deposit, demand deposit and time deposit, demand loan and time loans. Except all these four, anything is a non-banking asset which is not used in banking business, is a non-banking business. Banks cannot hold any property for more than 7 years. Understand this, these are banking MCQ questions often asked. Banks cannot hold any property for more than 7 years for the purpose of settlement of debts or obligations. Such time limit of 7 years can be augmented by Reserve Bank of India for another 5 years if it thinks appropriate, provided that out of the aforesaid number of directors, not less than 2 shall person have. Okay, so there is a mistake over there in second line. So I will be what this section is saying. If someone has mortgaged a property to you and he defaulted, now you have, as a bank, you have taken control of that property, right? So you can possess that property after the default up to maximum 7 years. Within 7 years, you have to sell it. If you are not able to dispose it within 7 years, you can apply to RBI, and RBI with its discretion can allow you additional 5 years of time. Now clear? An additional 5 years of time, right? But if it is for their own use, like like the office premises, etc., you can use for indefinite period of time. But if it is not for their own use, it is not bought for the own use of the banks, then you can possess any non-banking asset like building. Someone has mortgaged a building to you and he defaulted. Finally, you have taken possession of that property through SURFACE. You have sent the demand notice under section 13/2. Then under section 13 subsection 4 of SURFACE, you have taken possession, as we have discussed in SURFACE class. So on that, you have taken possession. From the date of possession, that property, that land, that home, or whatever you have taken possession of secured asset, you can own it till next 7 years. Additional 5 years subject to banks, subject to RBI's approval, but not beyond 12 years. Is it clear to everyone? 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 Can I move ahead? Section 10. Section 10A talks about the board of directors to include person with professional knowledge and other experience. Clear? So in board of directors of the bank, people should be added. Like in cooperative banks, you have seen that political leaders are added to the board, but as per the BR Act, nowadays cooperative banks are brought under RBI supervision. But before that, in board of directors in cooperative banks, any non-professional person was added. So that was the reason of their closure. So similarly, Banking Regulation Act says in the section 10A that board of directors to include persons with certain knowledge. And what should be the knowledge? What should be the experience they should have? At least accountancy, agriculture and rural economy, banking, cooperation economics, finance, law, small scale industry, any other matter, the special knowledge of and practical experience in which would, in the opinion of Reserve Bank, be useful for a banking company. So these are the main essential traits, knowledge, experience that is required from a director of a bank, or whatever RBI finds suitable to run a banking company. Then section 10B talks about banking company to be managed by a whole-time chairman. 10BB talks about power and reserve of bank to appointment chairman of the board of directors, to appoint three directors in a banking company. Chairman of the board of directors appointed on a whole-time basis, or a managing director can be appointed. Chairman and certain directors not to be required to hold qualification shares. Chairman of the board of directors who is appointed on a whole-time basis or a managing director cannot hold shares of a banking company by whomsoever is appointed, and a director of a banking company shall not be required to hold qualification shares in the banking company. Section 11. Requirement as to minimum paid up capital and reserves. It was at that time of inception of the BR Act, so not useful for nowadays. Capital structure. Subscribed capital is not less than half of its authorized capital, and its paid up capital is not less than half of its subscribed capital. We can skip it. It was important at the time of inception of Banking Regulation Act. Yes. Section 15 says Banking Regulation Act, you cannot pay dividend unless you are profitable. Unless banks are profitable, they cannot pay dividend. Dividend is the profit paid to the shareholders. Part of profit paid to the shareholders, that is dividend. Okay, so dividend is given to the shareholders, equity shareholders and preferential shareholders, right? So section 17 talks about creation of a reserve fund. Every banking company must generate a reserve fund out of its earning after tax and interest. Such reserve amount should be at any rate 20% of such profits. Exemption can be provided only if the cumulative amount of reserve fund and securities premium is greater than the paid up capital of the economy. Cash reserve discussed in section 18. As I have told you in yesterday's class, CRR or cash reserve ratio is discussed under section 18 of Banking Regulation Act and section 42 in the RBI Act. And section 24 of Banking Regulation Act talks about the SLR maintenance. So these are the tricks to remember. 42 and 24. CRR is to be maintained with RBI. SLR is to be maintained by the bank itself. So at least 3% of the total demand and time liabilities, and now they have done away with the minimum cap of 3%, can be kept with Reserve Bank of India as the reserve ratio. Okay, this is under section 18. Detailed session is also available in app. You can go through it. We will have a very generic session required for your exam point of view. Restriction on nature of subsidiary companies. A banking company shall not form any subsidiary company except a subsidiary company formed for one or more of the following purposes. So only for these following purposes, one bank can open a subsidiary, and for any other reason they cannot open it. The undertaking of any business which under clauses or subsection of section 6 is allowed, permissible. With the previous permission in writing from Reserve Bank of India, you can have a subsidiary. Section 20. Restrictions on loans and advances. Banks cannot grant any loans and advances on the security of its own shares. It is under section 20. Bank cannot enter into commitment for granting any loan or advance to or on behalf of its directors, any firm in which its directors, partner or manager or employee or guarantor, and to other firms where its directors have interest. So this point, the second point, is essentially known as conflict of interest. To avoid conflict of interest, bank cannot give loans to the firms where one of their directors is a shareholder. Is it clear now? Is it clear now? And bank, like there is a product in very many various banks, loan against securities, loan against shares. But someone can take a loan from you when he has shareholding in other banks, not in your banks. If someone comes to you and says, I have the shares of your bank worth 1 crore, please give me 1 lakh, you cannot give him a single penny, right? But someone who is having shares of other bank, other institutions, other companies, no matter what is the value, how volatile it is, you can give him a loan depending upon your policy. Okay, like 50%, 60% you can give at least. But here you cannot give a loan if it is bank's own shares. Section 21 talks about power of Reserve Bank to control advances by banking companies. So under section 20, banks can give loans and bank cannot give loans and advances to its directors and on the pledge of its shares. Under section 21, it tells that Reserve Bank of India has the ultimate power to guide banks, to take control over banks' assets, banks' loans, etc. Reserve Bank may determine the policy in relation to the advances and to be followed by banking companies in the interest of public, which we discussed in an MCQ previously. I hope all of you remember that. Can determine the purpose for which advances may or may not be made. Reserve can also decide margins to be maintained in respect of secured advances and can decide the maximum amount of advances in regard to the paid up capital, reserves and deposit. As per section 21 subsection A, rates of interest charged by banking companies not to be subject to any scrutiny or counts. Licensing of banking companies before last 1-2 years, it was often asked, because first that 2 universal bank license was given, then 10 small finance bank, 11 payments bank license was given. So it was a hot question at that point of time. It was asked often under which section and which act banks are licensed in India. That is Banking Regulation Act, section 22, licensing of banking companies. Section 23 talks about restrictions on opening of new and transfer of existing places of branches. So section 23 of restriction to open new branches, and upon fulfilling certain criteria you can open branches. So that is defined under section 23. Transfer of branches, you can to transfer branches in a location, even in a same district, you need to take RBI's prior approval. No approval required for transferring a branch from same village, in a same city, in a same locality. But if you change it from one locality to another, you need RBI's permission under section 23. Now clear? I am in a rapid fire manner because as your exams are ahead, you need to go through so many sessions. So please invest your time wisely in application. Access are given. Also, I will be sharing Basel class post the class is over, so that you can take advantage of that class, because without knowing Basel norms, going to exam is a blind decision. Definitely questions come from it, and I will be sharing the same class of Basel that we have covered last year with Karnataka Gramin Bank Officers Organization and Workers Organization sponsors class. So section 24, I am discussing this from yesterday, that it is under section 24 of BR Act, and SLR to be maintained, I mean maximum 40% of NDTL, whatever it is, CRR or SLR, that is maintained at a percentage of NDTL, net demand and time liabilities. Section 25, the assets in India, every banking company at the close of business on the first Friday of every quarter shall not be less than 75% of its NDTL in India, not asked normally. Section 26 says within 30 days after the close of each calendar year, banks need to submit the return to the RBI regarding the accounts which have not been operated upon for 10 years. So this is about which kind of account we are talking about, the amount that is to be transferred to the DIF accounts. Okay, so you know that after 10 years, if no transaction is made, the amount that is lying there in the current account, savings account, or in the accounts of a customer, in the deposit accounts of a customer, are to be transferred to the RBI's DIF. Okay, so Depositors Education and Awareness Fund. In case of FD, the period is calculated from the date of maturity. All RRBs are to submit the same to the sponsor bank. And I will tell you the trick. Many people say that once it is once it is transferred to RBI, the money is gone. Nothing like that. Whenever if it is transferred to RBI, whenever a customer comes to you, you can tell him to wait, that his fund is parked with RBI. Now wait. You will give a written. There is a format you will produce to RBI, and RBI will refund the same amount, and you will now credit it to the customer's account, right? So in case of RRB needs to submit that form to the sponsor bank, and sponsor bank will file that form with RBI and will take the money. It will take 2 to 3 months of time, but the money is refundable if once it is credited to DIF account, right? So it is unclaimed money, unclaimed account. We call it unclaimed account, unclaimed money. Clear? So it is under section 26. So section 27 says monthly returns. Banks shall submit. Reserve Bank, there are return formats you have to submit. Section 28, banks and RBI can display information in public interest. Section 29 to 31 talks about accounting and balance sheet. Section 33 says foreign banks needs to display their balance sheet in their branch offices. Like if you go to HSBC Standard Chartered Bank, you will find in their branch premises there will be display like a not added to notice board. It will be there on a table. It will be displayed on a table. The entire balance sheet. It will be displayed whole of the year till the next balance sheet is published. Like in your banks, there are published in notice board. It is not like that. It will be displayed on a table so that anyone comes there can check it, because foreign banks, that could be volatile. There could be volatility. There could be doubts of their sustainability. So any customer, any depositor comes to the bank can check the bank's standards. Section 35. RBI is empowered to inspect banks on its own or in the recommendations of the central government. 35A says RBI can give direction to banks. Banking Ombudsman scheme has come into effect through this section. Okay. Under section 36, RBI can remove officials in public interest. Under section 37, banking business can be suspended. High Court may, on the application of a banking company which is temporarily unable to meet the obligations, can make an order to close that banking company. Okay. So, and moratorium is also imposed for up to 6 months under section 37. Section 38 talks about winding up a banking company by High Court. If High Court will give an order to wind it up, it can be wind up. When it will give an order? When banking company is unable to pay its debts or application is made by a Reserve Bank of India to wind up the banking company. Under section 39, RBI to be the official liquidator of the banking company, that is to be dissolved under court order. And I said, who can be a liquidator if a banking company is liquidated or winding up or being failed? RBI, then SBI, or anyone being appointed by RBI can be a liquidator when a bank fails. Section 44A, procedure of amalgamation of banking companies subject to the approval of 2/3 shareholders in a general meeting. Section 45, the power of Reserve Bank of India to apply to the central government for the suspension of business by a banking company and to prepare the scheme of reconstruction of amalgamation. The moratorium on Yes Bank case, hope you all remember, was imposed through section 45. Section 45ZA talks about the nomination for deposit accounts. Form DA1, DA2, DA is for requesting a nomination, cancelling a nomination DA2, and variation changing the nominee is done in DA3 form. Okay. 45ZC talks about the nomination of safe custody. It is SC1, SC2, SC3. Safe custody form SC means safe custody. Then nomination for lockers, safe lockers 1, safe locker 2, safe locker 3. Safe locker 1 form is to request a new nomination. Cancelling a nomination is SL2. Again, changing the name of the nominee is SL3. Right? This section is often asked, and the name of the form is also asked in bank exams. Section 47A, power of Reserve Bank to impose penalty on anyone. I think all of you have seen financial newspaper. Every other day you will find in newspaper articles there are penalties imposed on banking companies for violating certain norms. Many companies get penalty for violating AML KYC norms too. So this penalty is being imposed under section 47A of Banking Regulation Act. Section 49 talks about the restriction of check. No person other than a banking company shall accept from the public deposits of money or withdrawal under check. So check is an exclusive material of bank. Other than banks, no one can use it, and it is as per section 49. No bank can change its name without the approval of RBI. Section 49B. No bank can change its name without the approval of RBI. So amendments added it is not applicable to primary agri credit societies, but applicable to cooperative banks. Okay. So that's all in this quick edition of Knowledgist, and this program, as all of you know, is being sponsored by Karnataka Gramin Bank Officers Organization and Karnataka Gramin Bank Workers Organization affiliated to BMS. And thank you, sir, Tiptur sir, for addressing today's session. And also, I hope all our students will do definitely better in this exam. We have covered so much of banking knowledge, and also classes given in application and shared in respective groups are also helpful for all of you. I hope all of you to come out with flying colors, and also we will meet again post the written exams are over, and before the interview classes, before the interviews are scheduled. Before interviews, we'll have a session 2-3 days before the interviews, or 3-4 days before the interviews. Okay. So thank you again for being with us. As you know that this program is being sponsored by Karnataka Gramin Bank Officers Organization and Karnataka Gramin Bank Workers Organization. All the best for your